Can't miss it. There we go. I'm recording it now. Okay, so we look at the euro. I might recap that mini S&P later. Euro obviously had a very swift sell-off in the middle of May. I'm sure we all remember that. And then we did manage to stabilise around the beginning of June. That actually, I'm going to show you the weekly chart just to recap. You probably remember from the last time, but we were looking for a low in the low 135 area, 135.30, and we did get it. However, I actually thought we'd get a really decent bounce off there, and we haven't got that. We've got very oversold on the weekly chart. This is very strong bid support, the 135.30 area. It did do its job. On a weekly basis, we didn't close below there. So we also haven't got this rally back, strong rally that I thought we might get. We've edged very slowly higher towards the 200-day moving average at 136.72. It took us a long time to close above the 136.15.20 area, which if you follow me, you'll know I had that as a big area, and it was quite significant. Okay, so what have we got now? I think we've got a flag formation here. I think this is a bit of a flag in a negative trend, in a downtrend. So I think sooner or later, I think we're going to fail to break above the 200-day moving average at 136.72. That also coincides with this upper trend line around the mid 136.70 area. I think that's going to hold us back this week, and I think eventually we'll break below this lower trend line, which at the moment is now the 136.00 area. And I think that will then signal that the next leg of this bear move has started. Obviously, the next target is likely to be the 135.30, 135.00 area, which were held at the beginning of June, and a break below there will, of course, add even more pressure, and this pair will start selling off. That's my theory. And you can see that we've got this longer term trend line here also. Let me just crunch this up, see where that goes back to. Okay, that's pretty much the whole rally from, that must be July 2012. Yeah, I was going to say that looks like it's 2 years ago. So that's a 2-year long bull trend. So of course that's going to be very important as well. This is the weekly chart you're looking at, don't forget. So that price point there is around the 134.85 area. Again, that's how it coincides with June lows around the 135.00 area. So a break below there is going to add even more pressure. A weekly close below there, for example, would be a sell signal for longer term traders. Just watch that carefully. I've got a feeling that will at least get tested, and we'll see if it breaks. What changes that? Well, we've got some daily fib resistance at 136.88, and we've got a 55-day moving average at 136.99. So I'd suggest that 136.88.99 area would be important if we break above the 200-day moving average. It's all within a 25-point area anyway, 25-pip area anyway. We get above 137.00, well, then I'd say I'm wrong. We're not going lower, and we'll continue to push higher, at least as far as 137.40, 137.45, which is 100-day moving average, and it's a 50% good retracement of that whole move down that started at the beginning of May. I hope that all makes sense to you. That's my best guess for the euro in either direction if it doesn't happen to go down as I think it will. Just look at the we got so oversold in the on the daily stochastics. We got oversold quite quickly, in fact, and we spent most of the end of May and a lot of June being oversold. So this little rally here, this not very steep recovery, has allowed us to now become overbought again. This is another reason. Just backs up the theory that this is just a little flag in a bear trend. Short-term chart, let's just have a quick look at it in case it's telling us something that you need to know. Not really. You can see this the trend line show that little up channel, and within that up channel we even got more sideways channels as the market appears to be running out of steam. So just watch that 136.2015 area. That's the first support you've got to keep an eye on. You start getting below there, that's our first negative signal, and then of course if we start getting below the 136.00, 135.90 area, that's going to add some pressure on this pair. You can see the 4-hour chart, the stochastics have already turned negative in fact. So possibly this pair will start to sell off sooner rather than later. I'm not sure what numbers are out today. You probably know better than I do, but maybe that would be the trigger. Who knows? We're not seeing a great amount of volatility. It's been a real struggle. So it's patience in this market that is required. Okay, we'll look at cable. This looks more positive than euro in my view. That's let's start with the weekly chart. Beginning of the week, so it's good to check out the weekly chart. So we've had a heck of a run. Again, I think that's July 2012, was it? 2013, sorry. Okay, so we had a really strong run for the year. Got through 170 double O, eventually a big psychological level, but eventually we got through it having peaked at 169.96 before back in May. Through June we've managed to push out. I still think this looks okay. Yeah, we're massively overbought on the weekly stochastic, but as I say every week, that is never enough of a reason to sell it. In fact, the weekly moving averages look quite positive. See how that 100-day moving average is now starting to edge away from the 200-day moving average. So that's a positive sign. Quite a strong bull trend. Not seeing any negative candles. Not really seeing any negative patterns, I don't think, unless you've spotted any that I've missed. But the trend lines tell the story. We're in a nice little steady uptrend. Something to stay with, I think. It looks fine to me. I'm not seeing anything that would particularly concern me. Yes, we are overbought here, and I know I just said the euro is overbought, so but I'm seeing other signals in the euro that make me feel more negative about it. We could see some profit taking perhaps in cable, but I think the overall picture is generally more positive. Obviously, we've got highs here at 170.63, so we're going to have to get from there this week if we want to push higher. Short-term chart, well, bit of a wedge formation there. I think this is a continuation pattern. I think maybe we'll continue to go sideways. Maybe that will allow us to unwind this situation on the daily chart. Maybe we'll get back down to 50 or a little bit below there if we go sideways through this week. Excuse me. Which, at the moment, that's indicating what will happen from this short-term wedge formation that will just trade within down to maybe 169.75 and up to this sort of mid 170 area, 170.40, 170.50. Those are the areas to watch. Keep an eye out for a breakout. As I say, I think if and when we do get the breakout, I favour it to the upside unless anything changes this week. But if we do start to break below here and close below here, watch for the safe spike before we then break higher. That's always a nice one to squeeze out a few week longs. Often that's me get squeezed out as you see the break and then boom, straight back up and through the top and away we go. Squeeze out a few week longs, get a few shorts involved and then you get the big move to the top side. So watch that. If we do break low, we'll have to watch the previous low. Here we are, where are we now? 169.48, that ties in with the short-term moving average at 169.42. So that 169.45 area anyway would be the next target to watch if we break lower. But if we do break lower and close below, we should head a fair bit lower. In fact, 168.35 area would be, I think, a realistic target if we were to break lower. But as I say, I fancy a break to the top side eventually, but I think more sideways action this week is likely. That's my best guess for cable. Silver is worth talking about. Okay, so silver. Weekly chart of silver. It's getting quite interesting, silver. I'm going to push this right up just to get the picture. I'm sure a lot of you are keeping in touch with gold, but maybe not so much with silver, so it's worth having a look back. Of course, we had a huge run. I wrote an article for Intertrader. I don't know whether you saw it, but I gave some statistics on how silver had traded compared to gold. And it's certainly more volatile in percentage terms. Anyway, we've sold off quite significantly since April 2011, so just over 3 years ago. Nice big bear trend. I think this triangle shows that we're bottoming out. I think this triangle is on the weekly chart. It's quite a long-term pattern. This triangle started when we bottomed in June 2013, so that's a year ago. I think it's a very nice triangle pattern. I think that indicates we have bottomed out. This breakout, that'll be now 2 weeks ago, I think that actually was triggered by the FOMC meeting when Yellen said that stock markets have priced absolutely fine, nothing to worry about, everyone relax. I don't believe it, but we'll see what happens. So that was triggered by that FOMC meeting, and since then we hovered. I've got a theory behind why we're hovering. I mean, well, I'll show you. Daily chart wise, I had a target which was nicely hit, although I didn't manage to jump on this move unfortunately. All these lines you'll see in my article for Intertrader anyway, if you manage to catch that. I did tweet it. So this is the red line's the big triangle that you saw on the weekly chart. I've left them on. We burst through the 100-day moving average. We burst through this red line, which also coincided with a 25% dip and the 200-day moving average. Didn't even pause. Quite surprising. We just shot through there. So clearly there was either some enormous short covering or someone was buying this big time. And we've edged from there up towards this 38.2% bid, which is 2116, and this trend line here, which goes back to the 19th of September. That black line there, I figured that that would be as far as we go, considering how overbought we are. So if you were watching, following my silver comments, you'll know that that was the target, and that held really nicely. Took 4 days before we turned around on Friday afternoon, and I think now we head south. Let this overbought stochastic unwind. But remember that weekly chart pattern. I do think silver looks positive longer term. I do think we've bottomed. I do think that triangle pattern means that silver will start to build into the next leg of the bull market. I'm hoping and really I am expecting silver to sell off this week with a bit of luck down to this 2030, 2025 area. Maybe even as far as this red trend line down here at 2005. So anywhere in that low 20 area, I think is a reasonable target for some profit taking to unwind the situation. Don't forget most people will consider that we're still in a bear trend, and as we haven't broken 38.2% fib, then I would suggest that that is in fact the case, even though I think we're about to build a bull trend. So if we can get down to that low 2030, 2010 area, I'd certainly be getting out of any shorts. I personally think it's worth trying some longs and seeing if we can hold that support level and then push higher in the second half of this year. Don't know what will trigger that. We have been seeing higher inflation in Canada, US, one or two other places. Maybe the low inflation environment is over, or maybe it's why silver is reacting as it is. I don't know. But I'm concerned about stock markets. I'm concerned about inflation. So I think holding silver is quite a nice way to hedge against that, at least longer term. Obviously, if we start closing below this trend line in the 100-day moving average, that means I'm wrong. We're back down into this area, and that wouldn't be very positive for silver at all. But we'll just review that on the next webinar. Am I suggesting that 2020 to 2030 is a buy zone? Yes, that's exactly what I'm suggesting. I'm suggesting that we probably should see some profit taking this week. I'm hoping it will be as far as that area. I'm not saying it definitely will be, but I do think, just to recap, make myself absolutely clear on the weekly chart, that I do think that this triangle pattern indicates that silver has bottomed and is about to start a more positive trend, and I am happy that we hit my target of 2116 trend line and Fibonacci resistance. Being so overbought, did expect that to hold, so I'm pleased that that has happened. I now think there's a good chance we will head back down to the 2030 area, 2030, 2010, and I think that that could be the last chance to buy silver before it takes off. We'll see. That's my theory. That's what the chart's telling me. That would be a buy and hold situation, I think, personally. Short-term charts, well, yes, we've got this little, well, it's just a little channel here that we're trading within at the moment. We've been quite quiet over the past week or so as we consolidated the gains and held below that important trend line and Fibonacci resistance area. So really, I'm looking eventually, I mean, we may now just go back up to test it one more time around the 2120 area and then come lower, which is getting a little bit oversold short term actually. So that is a potential shorter term situation over the next day or two, perhaps a little last go at 2120, then maybe a break back down to that low, as I say, 2030, 2010 area. I think it's about as detailed as projection I could possibly give you. Those are my expectations. What will tell me I'm wrong? A daily close above 2120, I'd seriously have to reconsider and think that, well, I mean, longer term I'm positive anyway, so that wouldn't be something that would be a shock. I'm not saying we're definitely going to fall back down to the 2030, 2010 area. I'm just saying it's a strong possibility that we'll see some profit taking down there, and I'm hoping we do because I really think that's a longer term buy area. However, if we start closing above 2120 for a day or two, then that would mean the bulls are remaining in control. Ignore the fact that we're overbought. That won't matter. And I think we'll then be pushing on to somewhere around the year's highs, certainly that 2190 area, 2190, 2200, and of course above there we're going to have to watch for this high for the year so far at 2217. Um, again, don't think I can say any more on silver at the moment. We'll have to see how that develops and see if I'm right. But those are my best guesses for silver. Okay, gold. Everyone loves a bit of gold. I get asked about this one a lot. It's one of the most popular markets that I chart. Actually, I think one of the most subscribed to markets. So there's the weekly picture for gold. Not really telling us anything. It is a different picture than we have on silver. It's not quite as positive in my view. Sorry, just let me do something over here. Just keep the monthly chart. It's not as positive for gold as it is for silver. I don't think. Um, this isn't really anything that we can judge much here. I mean, it's a sideways pattern. I'll throw a trend line down here in the weekly chart for gold. There you go. So there you go. Winston's not telling us much. We got so oversold. I did get quite positive about gold, you probably remember. I certainly was screaming that we'd bottomed out here at the beginning of January. If you follow me on Twitter, you'll know that I was raving about that being a double bottom above some very good weekly Fibonacci support, and I thought we would recover. And I actually thought that over the few months we'd really squeezed high. We got to our first target and then turned around, and the sell-off here actually caught me out. I didn't expect us to get quite as low as we did, to be completely honest. Okay, so what happens now? Um, we've had a good squeeze up in gold, but we're not really managing to get back above this trend line very convincingly, as you can see. So we bottomed out here, 31st of December, in fact, 2013. This trend line seems to be what's dominating at the moment. We've been hovering around it, unable to close above it. So I'm wondering, does that mean we're going to start to head lower? I think we will. I think we'll head back down to the 1302. 1298 area. It's quite good support, so we'll have to see what happens there. If it doesn't hold, we're down to the mid 1280s, I think, then. It's a bit of a mixed picture. I've got a lot less conviction with gold, but I do think we'll probably see it lower. I suppose that does coincide with what I see for silver this week as well. I'm not suggesting that gold's going to collapse either. It doesn't really seem to have a lot of direction. I think it's trying to find direction, but in the very short term anyway, I think we're more likely to see 1302, 1298 than 1331, 1333, which would be my target if we do happen to push higher. And I do think that that will be strong resistance. If we see it this week, it's an obvious target. We've got April highs up here at 1331, and we've got fib resistance of 1332, 1333. So that low 1330 area, I'm sure I talked about this in the last webinar. That would be strong resistance, and that would be my target if we do push higher this week. But I favour some profit taking. I favour a move to the downside. We haven't managed to get near 1330 last week, and I think we're going to see bulls just give up at least in the very short term and see this market just lower. Just it's pretty dull. We're overbought on the stochastics. That helps to reinforce that view. But yeah, I can't get overexcited about gold at the moment. Fibs are working well. We had 1306 as our downside support last week where I suggested getting long. That worked on a couple of occasions, so we had some really good trades in gold, despite the fact that the picture's a little bit cloudy, but last week's trading did work quite well. I think we all made a little bit of money on that. Okay, that's gold, unless anyone's got some questions on it. Oil. Yeah. Sell 1331, 1333 is a possible trade. Just answering your question there. That is a possible trade. I would suggest that's a decent resistance area. You can see where Fibonacci resistance, April highs, and therefore, if we manage to squeeze up there, I think there's a good chance, especially when you consider how overbought we are, that that would, at least on the first test, see a little bit of a pullback from there. So if you were short, you might be able to take a few points out of that trade. Um, oil, WTI crude. Okay, so oil has been in the grey ball run. This is the August contract only, not the continuous contract. I'm just looking at this at the moment. So oil's been in the great bull run, and I don't think we've seen the end of the bull run, but it does seem that short term we've topped out a little bit. We've got a small double top here at 17.45, 17.50. It's only a small one, though. I think it could trigger a bit more profit taking. Stochastic and that MACD on that positive for the daily chart. You can see what's important. This trend line here is very important. Trend line goes back to 16th of April, so it's working very nicely. We'll have to see whether this holds. If it doesn't hold, it's going to go lower. Probably test this trend line down here around the 104, 103.80 area. That I would guess would be a decent buying opportunity. By then the daily chart would probably be quite oversold. So I guess what I'm trying to say is there is scope for some more downside if we break that trend line. But I think that will offer a buying opportunity. I don't see that the bull market is ending. I don't see that we're going to have any significant sell-off. Um, Short term, what's that telling as well? Big old fib support area there around the 105 double O area, and that also ties in very nicely with this daily trend line around the 105 double O area. So that is really important. That is the area to watch for this week. And if we start breaking below 105 double O, we're not only breaking trend line, but we're also breaking fibs. So we should head quite swiftly towards 104.75. So if you're quick with your fingers and you can get short on a break below 105 double O, you might see maybe 75 pips or so out of that. And so I think we should head towards 105.425. And if we get as far as 103, let me remind myself, where are we down here? Sort of 103.90, 103.80 area. Ties in quite nicely with some short-term moving averages and short-term fibs. So that the high 103 area, I think, would be a good buying opportunity if we got down that far. We can see price action-wise as well. We've got some highs up here, 23rd of May. So yeah, late May highs coincide with all of that. I think that looks like a really nice area to be buying back into oil. There we go, on the daily chart, that's even 3 or 4, clicking backwards and forwards, short-term in the daily chart. But yeah, that sort of high 103 area would be a nice buying opportunity, I think. Can't really add much to that. If we hold 105 double O, well, of course, the bull trend's nicely still intact, and then we can start to push higher. You can see we've got some little highs around this 106.5 area, 106.46, 106.39, 106.47. So I think that would be a reasonable target on the first target. If we can hold 105 double O, maybe we can get up around 100, 130, 100, 110 ticks higher than where we are now. We'll have to see what happens there. But again, oil as dull as some of these forex markets, they're not doing an awful lot really. But I think the bull trend will resume eventually, probably kicked off by some tensions in Iraq. That seems to be the driver at the moment. We're on the subject of oil, so I may as well have a quick look at Brent. Less positive, that one. We've come off a little bit more. We are building into a short-term downtrend here. I don't think that's anything too serious to worry about. I don't think that will continue for too long. Again, I think this is just providing us with a buying opportunity. What evidence can I give for that? You can see that double top here in Brent as well. It's triggered some selling. We're just getting below this fib support. So yeah, Brent could stay under a bit more pressure. But I just have a feeling that this isn't going to go too far. Anywhere in the low 111 area looks like Brent could hold. Short term, yeah, well, stochastics and MACD look quite negative for the daily chart. So it does look like potential for some more downside. Got some short-term fibs at 12.40, so that will be important. Actually, that was my target for Brent through 12.40. So let's see, where have we got to so far? We've got 12.51. Okay, that's good. Did say on a break below 13.68 we should head lower, and that has happened. In fact, look how we tested that 13.68 level and then sold off from there. So that was a nice trade. That would have worked quite well. I think that was one I recommended this morning. When did that happen? Yeah, that has happened today. No, sorry, that happened Friday. Okay, that was a wonderful opportunity. I won't go on too long on Brent Crude because I don't think anybody will trade it. But worth noting, yeah, I think a bit more weakness in Brent. Nat gas I'll leave. It's Dow. Don't know if any of you trade it. I know the DAX is something that a lot of them do trade, so I'll have a quick look at the DAX, and then we'll do a couple of currencies and any requests that you've got. I do have to sign off at 15:15, which I know is when the webinar is supposed to finish, and I've got a dash. Okay, so DAX, not as positive as the US markets. Why the US markets are holding up, I'm absolutely baffled, but anyway, they are. I thought they'd lead us lower. They haven't. Okay, so 10,000, big psychological level, really. It's a big, big round number. We haven't really managed to. Let me see, did we close above it on a weekly basis? Close, yeah. 10,018, we did manage to close above it once, but that didn't last for long. Um, And it's, well, I think psychologically that's such a big number. I think also that 2,000 is such a big number psychologically for the S&P. But, we've managed to get within 2% of that with the S&P. I think that's pretty good. And surely if we've been wrong for quite a while, you've got to be thinking, 2,000 in the S&P, 10,000 in the DAX. Big number. I've done well. Maybe I should take some chips off the table. Maybe that is what's happened in the DAX at least. And I've got a feeling that might happen in the S&P, as I said earlier. Okay, so daily chart of the DAX, what's that telling us? Well, we had a nice little uptrend from April through to early June. That trend line then acted very nicely as resistance, and eventually bulls gave up and we couldn't get back above that trend line. We saw a sell-off. We got below this trend line. Trend lines have worked really well for the DAX. This trend line was support, very good support, became very good resistance. We're tracking back up towards that trend line now. So that's at 99.15. Watch that area if we rally another 56 or so today. But yeah, not particularly positive unless we can close above 99.25 again this week. But otherwise, I think we could continue just a little bit lower. Let's have a look at the short-term chart. Yeah, we've got this little double top here, which is more emphasised in the short-term, of course. Um, we did double top. We topped here on the 10th of June at 10,038. We then topped on the 20th of June at 10,049. So that is a nice little double top in my book. We haven't quite seen such sharp sell-off. But you can see the levels are working. 98, 95 is a fit level. That's worked well today. In fact, 98, 98. I wonder if I put that in my report. Let's have a look in a minute. Let's just have a look at what I wrote in my dash report and to remind myself. I'll get that up in a minute. So 98, 95. Yep, that's worked. And then we've got this low 99. Oops, where are we now? 98 double O area. We spiked below that last week, but we've been holding it so far. Let me just get my DAX reports up. I just want to remind myself what levels I've got on there. DAX. Here we go. But yeah, I'm concerned anyway. What I'm trying to say is I think the DAX could head lower. Doesn't look that positive. 10,000 big level, not really worked. DAX was quite weak recently, and I think that weakness could continue. It's a bit of a guess, to be fair, because the patterns aren't really telling me anything. Yeah, we've got that double top. Yes, we are holding below this trend line. I guess that's why I'm feeling more negative at the moment. I probably feel more positive if we're closing above there, and I think we would stretch up to retest 10,000 and above. Just going to remind myself what I wrote in the DAX this morning. Give it a chance to load, sorry. Is it all loaded? No, I'm loading. Shrink that, sorry. Screen's frozen, as usual. Okay. Oh, here we go, DAX. DAX held first support recovered, not quite as far as resistance, 98.65 We've hit that today, we blipped a little bit higher. Here we go. We can target 98.95, 99.05 for selling opportunity. Okay, so that has actually worked really well today. I do believe the DAX high for the day is 98.98. Okay, so that's what we were looking to do today. Sell up to 98, 95, 99, 05. Well, that's what really exit long and try shorts for stocks above 99.20. So that in fact was a really low risk trade, risking about 25 pips or something maximum. Um, and then 98.25, we've got to watch on the downside. Below there, we're going to see 97, 97, 95, and then last week's like 97, 56, 55. Break lower cannot be ruled out this week. You can target 97.25. A bounce from here is possible with prices continue lower. Look for a buying opportunity at 96, 90, 96, 80. Exit shorts trail on the stock to low 96.45. Okay, so I think that's pretty clear. Hope that is clear to you. Quickly, I'll leave alone. Well, I'll just quickly show you. It's stuck in a bit of a channel really. It's going nowhere. There you go. We've got close to the top of this channel. This is a weekly chart, so it's quite a long term. Goes back almost a year. Doesn't look that great. I think eventually we'll test the lower end of this trend, but unless anyone wants to look at share, I won't bother to stick on that. Let's have a look at the Aussie dollar. We've got 8 more minutes in case anyone's got any questions for me. Okay, Aussie dollar. It's a bit of a mixed bag, but it does look quite positive. We are getting a bit overbought in the weekly chart, but this market doesn't seem to want to go down. So I did recommend buying it last week. I'm sure if you follow me on Twitter, you'd have seen that. This was an obvious one. I know a couple of my followers did alright on this trade, actually. They tweeted to me. So 93.50 area was the one. And I paid 93.60 in the end, and we rode that up to 94. Well, I rode up to 94.08, and that was good enough for me. So, okay, we're in an uptrend, but we are struggling at 94.45, 94.50. We have come back down again, and I guess the important support is definitely 93, sort of 90, 80, which at the moment is holding. You can see that the fib, there's a short-term moving average, and there's a trend line. So that is going to be important. That's going to be the key. 93, 90, 93, 80 is the key. If we hold that, then clearly we've held the uptrend. With a nice month-long uptrend on the short-term chart, and we'll just push higher. Probably retest 94.45, 94.50. Probably that time we'll actually break hard because it does look okay, I must admit. I think that looks alright to me. A break below, sorry, that's a weekly chart. Getting confused with my own time period now. Let me get the daily chart back. Daily chart, where are you? Here. Sorry, I'm all over the place. Where's my daily chart gone? Okay. Sorry, just bear with me. I need to try and get that daily chart back up so I can see what I'm talking about. There we go. 94.60 is this year's high for this pair, seen in April. So obviously that is what needs to be beaten if we're going to go higher. And I think we can. I don't know how I can really explain this. All-time highs, well, sorry, not all-time highs, recent highs, yeah, we should probably be shorting it in theory, because it's got a little bit overbought. We've only gone sideways, but for some reason I think we're going to break high. I can't really put my finger on it. I just think this looks quite strong. I think that's a continuation pattern over the last 2 months. I think sooner or later we will break above 94.60. I can't give you any firm reasons. Well, you can see the 100-day moving average is crossed over 200-day moving average, so that is quite positive. I don't think the stochastics look too bad. I've just got a feeling it's going to go higher, I guess. We're in a nice bull trend in the short term. So watch that 94.45, 94.60 area, and if you see it breaking above there, I think that should confirm the fact that this pair is going to go higher. That's what I fancy at the moment. Of course, if we start breaking below 93.80, that's going to call into question my judgment on that. I've got 5 more minutes and then I've got to sign off. Dollar yen is a fairly boring market, but the levels do work. I have to say, they do work intraday, and if you just like to sit there and just take pips out of the market, dollar yen's quite a good one to trade. The levels do work. You don't have to think, you just trade the levels, you get in, get out, and it does work. For now, You can see that we have not been below the 200-day moving average. That's the pink line. We have not been below the 200-day moving average for a long time. Let me just let this chart update. When it does, you'll see that we haven't been below the 200-day moving average, certainly not this year, probably not since the end of last year. We are just breaking below that now. Friday we pushed below, closed below. It does look quite negative at the moment for the dollar yen. I think we could retest. Well, we've got this trend line support here. For some reason my chart isn't updating anyway, it doesn't really matter. What matters is that we've got this little trend line here which we're just holding around the 103, 101.30 area. Looks like we could continue lower. We're not oversold enough yet. I think we could get down to retest this. I think it's this year's low. No, it's not. Sorry, it's May low at 182, and we'll have to see what happens there. It's not a very clear picture. I mean, you can see on the grand scale of things, we've only really gone sideways in the dollar yet. So let's just see what. I think we will test the May low. Actually, that is the year's low that we saw in May. So that will be really important. Watch that 185 area and see what happens. We start breaking below that, then yes, that is going to be a pressure to this pair. Only a close above 200-day moving average now, which today is at 170, will rescue bulls from what looks like continued downside pressure, as has been the case throughout the whole of June. Really, we've just been edging lower, and I think that could even accelerate. I've got 3 more minutes if there's anything else anyone would like me to look at. Just FTSE, yeah, of course. FTSE. Someone's asking for the FTSE. Okay, where is the FTSE? Here we go. Okay, so the important thing about the FTSE is this channel. We've been stuck in this channel since October last year. We edged up towards the top of that channel at the end of May. Beginning of June. We couldn't quite get there. Look how boring it was for 1, 2, 3, 4, 5 weeks. Just went sideways. Now we started heading lower along with the other European markets. So yeah, I think the fact that we projected that, well, we've certainly come back halfway within that channel, and that's acted as support, which is often the case. Daily chart, let's see if that's telling us anything there. We've got quite oversold, and we bounced off the 200-day moving average. Yeah, I remember that in my report. That was one that we needed to look at. So yeah, we're recovering now, but I think this recovery is just going to give us a selling opportunity. I just don't feel that positive on stock markets, and I'm surprised at how strong the S&P is, but I think that perhaps that rising wedge in the S&P may just spell short-term profit taking. Short-term chart, what does it tell us? I'm going a little bit overboard there now in the FTSE, so maybe we will start to head lower again in the short term beginning of this week. It's such a mixed bag. It's tricky. It's quite gappy. We seem to have a lot of days. Look how we seem to have a lot of days where we move around, but we close near the open. That doesn't help. It doesn't really. Let's look at this. 1, 2, 3, 4, 5. I don't know. 5 days in that period where we just close near the open. Sorry, a bit vague with the FTSE. I don't love the FTSE. I find it difficult to read lately. It is tricky. I guess the important points are last week's low, which is at 66.53, 200 moving average 66.49. So on the downside, that is important support. Look how it ties in with a little bit of a trend line here. So we start breaking below there, we're going to see 66.14, and if we get below there, that's going to be even more negative. I am inclined to sell any rallies. If we got as far as 66.77 up here, I think that would probably be a good selling opportunity. The 66.70 area, I think probably a good selling opportunity. Sorry, a bit vague. FTSE just not doing it for me at the moment. Just before I sign off, just going to show you that E-mini S&P again in case you missed it right at the beginning of the webinar. Just want you to be aware that potential negativity, this rising wedge in a bull market can signal a short-term top, and I think we are I'm not the only one saying it, but I do think we're overdue some profit taking. Not a big sell-off. We do need to just unwind a little bit of an overbought stochastic, and I think if we can break below this trend line in the mid-1940s to this week, we'll see 1930. That might be as far as we go this week. But I fancy the downside more rather than the upside. well, we're going to have to get through 1962. That's the upper trend line. All-time high is 1960. Upper trend line 1962. We're only 2% away from that big 2000 number. I'm small short because I fancy we're going to see a little bit of profit taking on that. That's all I can say. Thank you very much. That's 45 minutes. I think we're due to finish the podcast, and I'm afraid I do have to finish because I've got a dash. So thanks very much indeed. I can see a few regulars there, so you're probably well aware already of my website, which is datatradeIdeas.co.uk. If you go to Market Update, I post videos on here quite regularly. You can get lots of free stuff on there. There's some videos from last week. There you go. So keep an eye on that. And of course, if you want to subscribe, it'll make you a very happy analyst. And you can do that on the homepage and choose whichever markets you like. Thanks very much indeed. Until next time.